So if you're going into a deal and where like it feels highly extractive or the other side isn't happy, that's just on commercial terms. For me, I don't want to do it, right? And it works both ways. Like if like we feel like we're giving a lot of resources or building something that's incredible, and the other side doesn't value it or recognize it, it's probably not a good recipe for success. And obviously the other way around, if someone thinks the price tag is very high and unjustified, that's not a good way to enter a relationship.
Welcome to High Stakes, the podcast committed to demystifying the institutional adoption of blockchain technology. I'm your host, Alex Nwaka, and today we're elevating the Web3 discourse in a series of conversations with industry iconoclasts that are shaping the future of Web3. Now let's get started. Welcome back to another episode of High Stakes. I'm your host, Alex Nwaka, and today I am joined by Omer Goldberg, who is the CEO of Chaos Labs. Welcome, Omer.
Alex, thank you for having me. I think we're looking forward to this for a while, so I'm glad that we got it on the books.
Yes, we finally got it on the calendar, and so really happy to have you here. So, Omer, I think where we would start is really giving you a chance to sort of introduce yourself and sort of your background, where you sort of come from a, sort of a professional background perspective, and then made your way into Web3. And then we can talk a little bit more about sort of the inspiration for Chaos Labs and what you all do.
Happy to start from there. So background is kind of grew up between New York and Tel Aviv, studied computer science and electrical engineering, and then moved over to computer science at the Israel Institute of Technology, the Technion. During school, started two companies in developer tooling and a ride-sharing app for all of the students on campus. So it was very clear to me, I think, from the beginning that I wanted to do something entrepreneurial and was always looking for different opportunities. Towards the end of my undergraduate degree, I was working on a lot of open source. I published some stuff that caught the eyes of recruiters at Facebook. They had just opened up, they just acquired their first company in Israel and opened up a site in Tel Aviv and recruited me, and I ended up joining as one of the early engineers in the Tel Aviv site. I think when I joined, it was, so I think there were 20 or 30 engineers. Today it's around 2,000. I left school, started working at Facebook, did about 4 years at Facebook, spent 2.5 years working on a project called Express Wi-Fi, where we were building internet infrastructure for emerging markets. So I was spending a ton of time in Africa, India, Southeast Asia. It was completely funded by Facebook, but we had no affiliation with the Blue app or Instagram itself. We were literally just building internet networks. That was like a dream job for me. And that led to another opportunity to relocate back to the New York City offices, where I was a tech lead at Facebook Lite Video, mostly working on performance, optimization, and scale. And then my last role was at Instagram, working on ads infrastructure for feed and stories. So at the time, rolling out kind of what is today, I think, like the core ads business, like around shopping with all of the updates after iOS 14, which disabled tracking via cookies. So that was like a really nice technological challenge. And about 4 years ago, left Instagram to start Chaos. And Chaos was many things until it became what it is today. But I'll pause there with the intro.
Yeah, no, that's amazing background. And, I'm curious, you spent time obviously at, one of the biggest tech companies in the world and in sort of, Facebook and Instagram. Any sort of learnings from, being part of like a really big behemoth organization? Was that something that, you felt like you were around the best and the brightest and like gave you the opportunity to explore a bunch of things? Or did you feel like it taught you, hey, I'm really just at the end of the day, a very entrepreneurial person and I like to sort of, build from scratch? Just curious what your experience was like and what you would highlight there.
For me, it was very transformative. So the way that I think something that's, I don't know if like all the listeners know about it, but like in Israel, there's like this big kind of cybersecurity, like entrepreneurial scene. And it extends not only to cybersecurity, but typically to areas with deep technology. So it could be machine learning, deep tech, AI, distributed systems, cyber. And the company that Tel Aviv had originally acquired in Tel Aviv was called Onavo. It was a team that were all alumni of one of the strongest cybersecurity units, had a lot of like operational experience. And they were just really some of the best engineers, like really storied kind of group. Joining them, I just felt challenged like every day. And I also had, I think everyone who I met like at Facebook was a pretty high baseline, but this was different. They were some of the best that I've worked with. And it really kind of pushed me forward. And then I think also, like, people tend to say this a lot, but the first 2 years of Facebook, we had all of the resources of Facebook in terms of like cloud and ability to kind of use the best tools. But due to net neutrality, which was a law that was passed then, and a bunch of other regulatory concerns, our project, which was focused on bringing new, like just humans online, was completely siloed from the rest of the business, which really meant that we were within Facebook, a very small group of started as like 15 people, grew at its max to around 40. So truly operated like a startup. And I did that experience for a few years before I moved on to like the more corporate side of Meta, which was Instagram and the Blue app, which was extremely corporate. So for me, I'd gone there after starting two companies with varying degrees of success, and just understanding that I wanted to see how software was being shipped and put into production at a high level. So yeah, I never had like a desire to be like a VP at Facebook. It was mostly about learning. And Facebook was great for that because every engineer there has access to the entire code base, and you're encouraged to just like push as much impact as you can.
Got it. And you sort of led into this already. It sounds like, again, Chaos Labs was a lot of things before it was its current incarnation. And so would love to hear a little bit of the background and the story of maybe the different incarnations and how you sort of navigated that to sort of where it is today.
Yeah. So this also ties into my time at Facebook. And Facebook has really, I think, developed the art of data-driven application development, where they really honed it in for anything that's consumer enabled. So just to like draw a picture here, like every single interaction within Facebook, WhatsApp, Instagram, Messenger, Oculus now too, I'm sure, is completely instrumented, right? So like for every flow, for every user, you know how much time they're spending in the app, what are the surfaces where they're spending more time, less time, what is leading to buying experiences, all of the things that with like frightening level of granularity, which is another discussion. But that is all to say that like every single product feature, whether it's like a backend performance improvement or it's a new product experience, is measured against kind of these core metrics, which are important for the company. And if it improves core metrics, then you can ship the project or the feature. If it regresses them, you can't. Oftentimes there is this middle ground where some are moving in the right direction, others are not. So there's actually like a lot of data science work for any engineer to kind of bring in their feature and actually make a case for it in front of a data science council about why this is net positive. While it was like a different like domain, and I personally was working on security, performance, in some cases, consumer facing experiences, what really stuck with me was the data driven methodology for determining which way to take your product. And as DeFi summer started, billions were flowing into the space. And I just saw that people had no idea how to set all of these financial complex parameters on their applications. So at the time, there was Compound, there was Aave, I just migrated from ETHLend, there was Maker, which is backed by single asset Ethereum, and billions were flowing in. These parameters had a really, really direct impact on top line revenue and user experience. And people were just kind of, finger in the air trying to figure it out. So the first thing that came to mind was, let's do this in a data-driven way. Now, to back up, I think one luxury that Facebook has is that there are billions of users that have applications installed on their devices across WhatsApp, Messenger, Facebook, and Instagram. So they really have the liberty of experimenting in production, testing in production, which is one of the things that Andre Cronje, one of the founders of Year in Finance and a bunch of other projects, used to say. Now, at Facebook, the price of getting things wrong, it's never good, but like, someone's cat photo isn't going to load on feed. That's not really the end of the world. But when you look at the world of finance and on-chain finance, despite wanting to move fast, that's really not like a methodology that we can adopt, because if you liquidate someone wrongly or botch a swap or anything like that, the price is literally very high and direct. So the next best thing that you can do, or that was my view, was create a very high fidelity simulation environment. So the first version of Chaos really was, we supported a bunch of different blockchains. And the idea was you could fork a chain from any block height, and we would give you an SDK to orchestrate the state of the VM. And you could we built a whole cloud for simulations. You could run simulations at scale. And test new features in this like simulation environment and basically get like statistically significant results on how that feature moves specific metrics in your product and use that to make data-driven decisions. So it's like, how do I take what we did at Facebook, which was amazing for the growth of the company, and apply it in a way that I think is best fit for Web3? That got everyone excited. I think like it makes sense, right? You're dealing with billions and you want to kind of do this in a data-driven manner. A lot of people signed up, and it was just me at the time. I bootstrapped the business like my previous businesses and crossed 2 million in booked revenue, but almost all at the same time, everyone said, this is too complex. We want to make data-driven decisions, but we don't know how to construct the simulations. We don't understand smart contracts, statistics, Monte Carlo, agent-based, all of these things. So we said, okay, let's listen to this user feedback. Instead of giving them like a developer platform to do these things, we'll take the infrastructure that we built and we'll create verticalized risk simulation and optimization products across different financial instruments. And that's where we are today. We have like an offering for lending markets. So we work with Aave and Venus and Radiant and Benki and a bunch of others. We have a basket of products for derivative markets. We work with Jupiter, GMX, DYDX, Ostium, and a bunch of others. Restaking, EtherFi, Renzo, and soon announcing a few more, stablecoins, and so on. So that is like the full kind of arc that we did, just picking up that user feedback, understanding that we needed to adopt what we had, our initial thesis, what the market was telling us.
Yeah, no, and you really covered sort of the range of sort of products today and sort of how you think about, sort of your core sort of customer set. I'm curious, when you think about what you do, as a company, I think most people always frame like, hey, is this a Web3 company? Is this sort of like a Web2 company? I mean, do you define yourself in that terms and Chaos Labs in that terms, or in those terms rather?
Yeah, I would say that like certainly the first 4 years of the company have been 100% crypto and basically servicing either directly applications or people who are active on chain. However, at the same time, a lot of what we've built is generic and can be used kind of across finance and in some use cases across different domains. So I think it's important, like for any startup, to initially kind of focus in on that like first cohort of users and segments. But I think something that we talk about often is that there's no reason that a lot of the tools that we built won't be like very useful for kind of traditional markets and even other use cases about that. So yeah, I think we're opening up the TAM and who we think we can serve.
So I always like to ask founders this. There's an element of how you define impact amongst your customers. Is there a particular way that you would define that for who you serve today?
Yeah, I think the first thing, like over the first few years, is just like no bad debt, right? So Chaos Labs today provides the risk platform, analytics, and oracles. And the first thing is do no harm. We're managing and entrusted with a lot of value, and thank God, knock on wood, no bad debt has been kind of incurred under our watch for the teams and the assets that we help manage. Now, that is like the easiest way to have no bad debt is just not to do anything. So that can't be the only guiding principle. The other one, which is a rough proxy, maybe not always the best proxy for how successful we are, is total value locked and volume secured under our application. So I think those are kind of the three that are leading. You want to increase the TVL and the TVS and incur zero bad debt. That's the goal. And then I think if you break down like specific products, there are different ways to measure it, but that's the high level.
Got it. And you mentioned one of the big shifts, I guess, from the earlier iterations of Chaos Labs to where it is today is really sort of taking Chaos Labs taking more ownership of like how does this just get deployed in certain verticals, and how should those companies think about risk and so forth. How much of that is a collaboration, amongst sort of your close partners to really figure out how to get that right? Because you're really going from, what I would say a more generalist approach to sort of risk management and sort of the tech around that to what I would say domain specific, right? And each domain I think has its idiosyncrasies. You could correct me on that, but how do you view that collaboration and how it manifests itself maybe in product?
Yeah, I think it's a good question. So it's true that, the verticals are called verticals because they're different. At the same time, there's a lot of overlap. So, I mean, you need to understand market structure. You need to understand liquidity, depth, volume, volatility. And these are things that once you build these primitives, you bring them wherever you go. Everything is running in the same simulation environment. So you also have like a platform And then it's like, instrument specific kind of business logic, where within the vertical, there's also a lot of similarities. So like
Uh-huh.
Aave V3 or Compound, I guess for lending markets, there are a few that are kind of novel, but many applications are like a twist or play on that. Same goes for GMX, Uniswap, and others. So that is just like in terms of this like interplay, but like things are different, but it's also you can productize around it. It's not easy, but that's what we've invested a lot of resources in over the years. That's number one. And so that was on the productization. There was a second part to the question.
Well, I think there's like the productization, and then there's also, how does that evolve over time in terms of the relationship between the folks that you serve? It sounds like you're sort of, in some ways, it's almost like a co-development sort of relationship in some ways, but maybe I have that too intimate of a relationship relative to the description.
Yeah, so I think it depends. I think first of all, like there's two interesting things there. Is like what does that relationship look like, and then how do you provide them something that is actionable? Right. So I'll start like with the actionable part. For the first 2 years of the company, we had this like great platform. You can go to Chaos Labs at XYZ and see it, and it's live for many different protocols. But it was essentially this analytics and risk recommendation portal that lived on the internet, the public internet, and not on chain. So we wanted to be able to kind of drive these real-time insights for the teams. And that's why we launched Edge Oracle. So Edge Oracle officially launched last quarter. As of today, I think we're the fifth largest Oracle in the space and quickly growing. This quarter, we've processed over 70 billion in transactional volume and have several billion in TVL directly under the Oracle. And we use that as there's like a risk Oracle and a price Oracle. And there's a proof Oracle too. The price Oracle is like maybe what you'd be used to if you knew some of the other Oracles that are pricing assets. The risk Oracle actually takes our real-time risk recommendations and puts them on chain. So now teams have this real-time risk API, and that makes it also just like easy for them to interface. There's a standard interface. Their contracts can kind of interface with ours, and they can plug it in a pretty light way. Doesn't require kind of like a lot of work. Now, in terms of like the product and the modeling itself, price oracles are that while there are differences between the verticals that you serve, it's pretty much like a turnkey solution once you built out that initial infrastructure. There are differences. For example, for a derivative application that's doing 100x leverage, you're a lot less permissive on latency and have higher precision requirements than a 150% over collateralized lending application, where there you may value stability over speed. Obviously, you want everything, but it's pretty turnkey. For the risk solutions, yeah, I think it depends. Like if you're a fork of something that we already support, like we'll come in and we're pretty opinionated about what that solution looks like. At the same time, we also do mech design and partner earlier with teams. We're going to be announcing some cool ones this quarter, but I think like historically, the ones that are public are things like Liquid EV2, like a new type of stablecoin, or EtherFi and Renzo that are figuring out restaking and slashing and AVS risk and what do all those things look like. So with teams that are promising or in a domain that is new, we'll spend more time in partnering with the teams and to really create like a risk methodology that both sides feel comfortable with and that we can stand behind before it's like really productized as something that goes closer to that turnkey solution.
Got it. That's super helpful. Maybe to also, get your opinion as somebody that's, been so close to DeFi over the years. I would like to sort of zoom out for folks that maybe aren't crypto native and really talk about, in your instance, where do you see the current state of sort of DeFi security or where we are with DeFi, like in general? Like, how would you describe that from where you sit, really more in the sort of risk management and sort of security apparatus?
First of all, I don't say DeFi anymore. I say on-chain finance because a lot of the value that's coming on-chain is not decentralized, but you just see like big issuers and institutions recognizing that it's better financial rails. But in terms of like just the DeFi or on-chain finance, security is always cat and mouse. In crypto, it's especially asymmetric. Why is it asymmetric? Because everything is open source and everything is transparent. I think a big thing in traditional, effectively computer systems is security by obfuscation. So you don't know like where it's deployed. You don't know what the application business logic looks like. Therefore, you need to kind of reverse engineer a lot and try to figure out where vulnerabilities are. And in crypto, everything is open. And not only is it open, a lot of people do audits and then they publicly post the audits. So as an exploiter or a black hat, you can literally go to a project and see what they haven't checked, right? So, and the proof is in the pudding. Like I think per TVL, there's billions of dollars in exploits over the years. So it remains like a big concern. And there's more like, I guess, education and consciousness to the importance of this. But it's continuing, I think, to demand kind of a lot of teams' budgets in order to stay ahead of newer threats. So I think that's also an interesting thing for people who don't come to the space is that relative to their Web2 counterparts, the overall budget allocation towards risk, security, reliability, infrastructure should be higher in Web3 than it is in Web2. There are also areas in which the cost to deploy and run the business is much lower, but I think that's like the trade-off of having these open systems.
And do you think there's a role for, companies like Chaos Labs in helping educate and then also onboard institutional capital into on-chain finance? I mean, I like that, sort of delineation between, DeFi and on-chain finance, because it does open the aperture a bit to what I would view as sort of institutional capital coming into, sort of the on-chain world. And so how do you see that, and how do you view the role of Chaos Labs in getting that sort of cohort comfortable?
100%. So first of all, yes, we have a role where we're constantly speaking with some of the largest like financial institutions in the world, and it's also motivation for Fidelity and PayPal participating in the last round as investors. I think there's kind of two different, I guess, blockers to adoption broadly. There might be more. One is just regulatory, right? So I think over the past years, at least for American-based companies or companies that work with American companies, which is the whole world, a lot of regulatory lack of clarity. That is something that I think is getting better. Or should get better with this administration, but it's definitely a blocker. And I think once teams determine that they can't transact and can do things on chain, there's a ton of fear because of the security issues and the reputation of the industry that we've spoken about in the previous question. So we help teams just understand like what is the taxonomy of like risk and security when you're doing anything on chain, and then really kind of split that up and explain like what is the risk, what is the threat, what is the exploit, what are examples of that, and how do you work towards being protected against that? I think in my view, the early years of the business focus very, very kind of directly and maybe narrowly on financial market liquidity risk, Oracle risk, but there are many more. And risk and security is a stack. So ultimately, like you need to understand like what that stack looks like. There's no silver bullet to fix anything. And we're pretty kind of, I think, organized in mapping that out and helping them make the best decisions for whatever business objective they're driving towards.
And you mentioned the risk stack. Maybe I'll prompt you on, what do you think today is the most underestimated portion of that risk stack from where you sit today?
I think how intertwined everything is, and also how early you need to start. So I think like one delineation that we see in the just Web2 world, which really doesn't exist in Web3, is this dichotomy maybe between risk and cybersecurity, right? And in crypto and with all these on-chain applications, like if someone is manipulating an Oracle and pumps the price 100x and extracts all of the Bitcoin and Ethereum from your markets, is that a financial exploit? Is it a cyber exploit? It's somewhere in the middle, right? So I think very early on, like we understood that in order to serve our customer base and really have like accountability, you needed to be able to have kind of expertise and tools and technology in-house to be able to address everything. And yeah, and I think in order to do that, you need to work with the best teams, the best partners, people who are battle tested and have built platforms at scale, but have also been in war rooms and know how to operate in those high impact, high leverage moments when it matters the most.
It's an excellent answer. And one thing I wanted to ask you, Omer, about, sort of your existing set of sort of customers and partnerships. Is there something or a set of things that really defines your sort of best partnerships in terms of, can be the ones in which you feel like you innovate the most, you have the most impact? But just curious from where you sit, you obviously have a variety of different folks you work with, but is there sort of a attribute or set of attributes that define the best partnerships for you all?
So yes, I think that Chaos Labs, until very recently, until the Series A, were a company that for the first 3.5 years never spent $1 on advertising. So we never like bought a place in a booth. We never paid for appearances or ran ads in any way, shape, or form. And I think that that is like downstream of being very kind of selective and conscious about what constitutes a good partnership and who is a good client for chaos.
Uh-huh.
So broadly speaking, in anything, I like a very big proponent that things need to be win-win. So if you're going into a deal and where like it feels highly extractive or the other side isn't happy, that's just on commercial terms. For me, I don't want to do it, right? And it works both ways. Like if like we feel like we're giving a lot of resources or building something that's incredible, and the other side doesn't value it or recognize it, it's probably not a good recipe for success. And obviously, the other way around, if someone thinks the price tag is very high and unjustified, that's not a good way to enter a relationship. So, first of all, like on the commercials, I think it's always that's something that's important as step one for a partnership. But then it's also the caliber of the teams. So, in crypto, you have this, I think, wild variance that is larger than any other industry where we have some of the most brilliant creative thinkers in the world. But then you also have a lot of people that are, let's say, short-term oriented and not necessarily here in order to build value. And you need to kind of, for us, almost all of our partnerships, if you look at our website, they're multiple years, right? And for the good customers, we only end up going deeper with them, right? And those are the things that we look for. So we look for like, is the team a high quality team? Can they execute? Do they have a long-term vision? And do they understand like, why this is valuable? And if the answer to all of those three things are yes, then it's something that I think is a good candidate for a partnership because yes, there is a software platform. But if you take our like highest tier, essentially there's financial services and risk management that comes alongside that. We end up getting very close to the teams, like talking on a daily basis. And we want to make sure that we feel that the investment is mutual, right? At this point.
Mm-hmm.
So we're selective when it comes to that. Luckily, knock on wood, we have the privilege to be able to be selective. I think early on, when it was just bootstrapping the business, it was like less the case when you're very early. But I think those are the partnerships that really compound over time. And just to tie that to the no advertisements, that's what became a driver for the business because our distribution was founders word of mouth, and we would work earnestly, honestly, and invest a lot in each one of our partners. And you had founders telling founders, and that is like the engine that drove the business. And I think that it's really important. We're post Series A now and growing, but it's something that's really important to be in the DNA of a company that's long-term oriented.
And, maybe just to wrap on sort of the product, the platform and customers, what are you most excited about for, let's call it the next 6 to 12 months? And it can be either the expansion of the current sort of product portfolio or services, or it can be, a particular area that you guys are spending time in. What are you most excited about for Chaos Labs in the next, let's call it 6 to 12 months?
So I think they're kind of, let's say, three quick things. So one is we launched Edge Oracle Network this quarter. It's the fastest growing Oracle. It's been incredibly valuable for all of our partners because, again, it's another step towards taking our like business intelligence and our AI and all the products that we have and just making it very actionable for teams. And not only what I'm excited about is obviously, the ability to react in real time and be proactive. Obviously, it improves the risk and security, but it's also been a very powerful revenue lever for these teams. And the explanation for that is just like, we spoke about this early when you asked me what the number one metrics are, but for any kind of risk or security team, the number one metric is no bad debt. And in a world where everything is static, effectively today, if you're not using Edge Risk Oracles, you're updating your protocol manually. That is just the state of things in crypto, and it's very dangerous in a market that is volatile as ours. The way to make sure that you don't have that metric increase is by being incredibly conservative in how you set parameters, because you need to be able to take into consideration that reacting to any market change may take several days. Therefore, you need that buffer. Now, when we think about kind of closing the gap between centralized finance and decentralized finance, one thing is people always talk about app chains and throughput and execution, but obviously none of that matters if your trade execution is orders of magnitude worse than what you'd see on a centralized platform. So being able to adjust things and react in real time to changes in liquidity, volatility, depth, allows us to be more permissive when the market is good, but also add constraints when it isn't. And we're already seeing for our early cohort of adopters that it's pushing revenue really high. because there are suddenly times in specific markets where you can get similar execution to Binance on a specific trade, right? And that's a big deal that never existed in DeFi. So that's number one. Just see the price, risk, and proof of oracles continue to grow. The second is we're going to launch a new AI product that we're really excited about, I hope in Q1. Chaos. And recently we've published some research with researchers at OpenAI and other leading frontier models. We've adopted language models basically after GPT-3 came out in a very heavy way. We're using, we're doing Monte Carlo and other classifiers and other models obviously before. The team has a deep background in ML and AI, but it's been transformative for our business because, you start by building this like ontology and understanding of numerical financial structure data. But ultimately, so much of the signal that's important lives in unstructured data. And it's getting like even more acute because this is where the industry is headed. When you had Ethereum that was natively minted kind of on chain and the asset existed completely on chain, you could maybe get away with that. But today, I think I just read this morning that stablecoins did like over several trillion in volume over the past year. And they're primarily backed by real world assets. So short term treasury bills, gold, can be silver, long term bills, other commodities. And to really understand their stability and kind of other assets in the world, you need to be able to kind of parse different types of signals. So for us, we built this platform internally. It's what's allowed us to scale the business really well with a relatively small team. And we realized that as a tool could be incredibly valuable for a bunch of different stakeholders. So we're continuing to work towards productizing that. And that is the second product that we're excited for, in addition to the existing business, which continues to grow and is obviously exciting as well.
Really awesome. So I did want to plug you on the fact that, when we were going through our fundraise process, you were one of the folks that I got connected with through sort of a mutual connection. And I thought you had a lot of really sage sort of advice coming from an operator side as it relates to what's the philosophy, what's the approach to, fundraise. And you've obviously had a lot of success fundraising just based on what you've been able to achieve, including your Series A that you raised from Han. So maybe I'll just sort of use that as an initial plug, Omer, for you to talk a little bit about, I think, your philosophy around fundraising and then how you drive process and really select a partner that sort of fits your philosophy. So with that, I'll turn it over to you because I think you have a lot of great insights to share there.
Yeah, thank you. And I really enjoyed the conversation. And I'm also happy that it's public now, right? We can speak about validation, right? So I'm really happy to hear the outcome of that. And it's really well deserved. I think for me, like the higher level is that what I've learned through business and over time, especially in Chaos Labs, is you need to make things as simple as possible. Oftentimes I feel about myself that like if it's complicated and I can't communicate or articulate in a simple way, a concept or a plan, then it's either not ready or I'm being lazy in doing that. And I take that directly to the fundraising. And I think that maybe it's because of media, maybe it's because of how it's portrayed in movies, but I think I had this like view that VCs know the market completely inside out and would understand, the intricacies and the nuances of my business and why we're or any business and why we're so excited about it. But the reality is that like, at least the leading firms are seeing hundreds of deals a year. There's no way they have time to go as deep as you as an operator or founder on your segment or business. And your job, like during the fundraise, is to tell a very compelling, simple story in the lens that matters for them the most. So in the end, venture capital is you're investing in like high risk startups with the goal of generating returns for your LPs. And in addition to getting them excited about the team and the vision, how do you take the vision and translate it into like a pretty like believable, tangible path of returns? So this is like the exit opportunity. This is where it could go. These are the market comps. And I thought that like in the beginning, I would talk about the team and the technology and it'd be very subtle about the other things because they would understand or do it themselves. And I was just like, continuously surprised at how simpler the process was, the simpler that I made it for people to grow. And that actually required work from us on the team to really kind of distill the vision and why this matters. But once we did that, it made things more effective and efficient. So simple, I think, is like the make things simpler.
Yeah, and I think as somebody that that used to be a venture capitalist, right? I sort of look at it as you've really, in that sort of quantification of like what the exit parameters could be. It at least gives an investor a place to start from. That whether or not they believe your assumptions, whether or not they want to overlay their own view of that, but ultimately it breaks it down into the economics of how the venture business works, right? Which is ultimately we're investing in a business that hopefully eventually generates profit and or enough revenue to then exit into either an IPO or be acquired by another company, right? Anything that you want to share on sort of your philosophy of like picking an investor? Because I think that you obviously selected Han to lead your round, and I know you had conversations with several other firms, but anything you'd like to share in terms of philosophy there that you think the broader operator universe could benefit from?
Just to cap off the last thing, if there was like one framework that I think we spoke about this specifically in the last time, was when I create my diligence materials, I just imagine it's like a IC memo. So I'm like, they could maybe disagree with the assumptions or decide that it's not for them, but like, I want to make it really easy for the other side to have a compelling memo for why they did it. And that is, if your DD docs, not the accounting stuff and all the other things, but it doesn't look like that, then maybe go back to the drawing board. Now, in terms of the investors, I think that it obviously depends on the founder. It depends on the company. I can speak for myself. I think that there are 3 camps, and it's important that you know who they are and that they know who they are. That there's alignment on that. There's quiet capital. So this could be like a really great brand, and they'll tell you like, look, we're going to write the check. We're hands off. Obviously, if you need something, these are the areas that we can help. But yeah, we're like entrusting you to do that. There's capital that's very active, and maybe you want that as a founder, or maybe they're particularly suited to help you push in an area which you feel like you need help. And if you're both aligned on that being the relationship post and expectations are there, then that's good. And then there's kind of like this busy work type of investor where they might be like making intros to you, but they're not relevant to the business, or they might be picking you constantly for updates and you're just trying to focus on building, which I think is like the worst. So I try to understand like, and also communicate like during the fundraise, like, hey, these are my expectations. And aligning expectations early, I just think is incredibly important. But I also think that it's important to note for many founders that like in the end, as well-meaning and as helpful as they'd like to be, the VC is not going to make or break your business. So also don't like illusion yourself with, I'm going to take this check and we're going to 100x revenue. So yeah, just be like very realistic and kind of grounded in what the expectations are, and then they're partners, but you need to go build a business.
Fabulously insightful, Omer. So our last question that we ask all of our guests here on High Stakes, we call it the hot take. What's your biggest and boldest prediction for the Web3 blockchain space in 2025?
Yeah, hot takes. This will be like very lukewarm.
Okay.
But and maybe not that exciting, but like the president is forking Aave, the president-elect. We had 4 years which were incredibly difficult between the administration and their view on crypto, the head of the SEC, FTX, Luna, all the other crazy things that happened. I think that now there will be a lot of noise in the market, and we already see it with the price of Bitcoin. And I just think one thing that's not necessarily a hot take is now is the time to execute. And we spoke about it before the pod started, is that things are lined up. So just if you're a founder or just an operator out there, we don't have many excuses now. And we need to kind of make sure we're firing on all cylinders. I'll leave with that. It should be a good 4 years, I think.
Awesome. With that, Omer Goldberg of Chaos Labs, thanks again for joining the High Stakes podcast. We're looking forward to having you on again.
Alex, thank you. Thanks for taking the time.
Absolutely. Keep exploring and keep innovating. Learn more at validationcloud.io and follow us on X and LinkedIn to stay connected as we continue to shape Web3 for institutions. This is High Stakes with Alex Nwaka, signing off.